Alright guys, in today's video I'll break down a recent trade I took. Now my goal here is to walk you through the thought process behind my entry so you can understand it and hopefully replicate the results in your own trading. So let's start with the 1 minute chart. Since for this particular trade it gave me a clear snapshot of the price action. Now you'd say here, why is that important? Well, because I used a simple 3-factor checklist to identify the key phases and turning points in the price movement. This analysis, I think, this objective analysis, I should say, led me to pinpoint an area of interest and ultimately my entry point. Now, as you can see in the chart here, the sequence clearly began with a sharp 45-point sell-off. Following this, the price reversed and fully rebalanced the move through a stair-stepping pattern. Then we hit a rejection at the 21,536 or so resistance level. Now at this point it's likely many traders shorted the shit out of the move here, expecting a continuation downward. However, the market had clearly other plans. It rallies back strongly, breaking out with a solid 75-point upward move. But here's where, in my view, it gets interesting. The breakout was short-lived as the market quickly rebalanced the spike with an equally sharp 75-point nosedive. This series of moves underscores the importance of understanding market dynamics and how price action evolves. So let's dive deeper into why I took the trade and how it played out. And now, as you can see, this 75-point dump I just mentioned was then followed by this 100-point market advance that takes us past the previous high. Now, logically, you'd think that the presence of a sharp counter-trend momentum move on this plunge suggests the market is setting up for a move higher. Well, here I'd say not so fast, because while the 100-point advance past the previous high might suggest a bullish continuation, there are critical factors that challenge, in my view, this assumption. First, the sharp counter-trend momentum on the prior plunge signals potential instability in the trend rather than confirmation of strength. Such aggressive back-and-forth moves often, as we already know, often indicate a battle between longs and shorts rather than a clear directional bias. Second, notice how the market begins to chop near the highs instead of showing a decisive follow-through. This hesitation is such a freaking red flag, I should say, as true breakouts are typically followed by sustained momentum. Instead, what we are seeing here is a potential exhaustion of demand with shorts likely preparing to regain control, as evidenced by the formation of this bearish order block and also the clean buy rate pattern up here. Third, the broader context needs consideration. If this 100-some point advance is simply part of a larger rebalancing process, the market could be setting up for another sharp reversal, trapping this way led buyers and screwing those who chase the move without actual confirmation. My point, guys, is that before jumping to conclusions, it's always important to analyze the price structure first and look for signs of conviction or the lack thereof in any move you are seriously considering for a potential entry. All right, let's now dig deeper into the chart to break this down further. So, following the initial buy rate here, we see a second decline that strongly resembles algo-driven behavior. Now, these kinds of moves, as everybody knows, often occur near uptrend highs where the price undercuts key support levels and triggers a sell-off. And now, what makes this decline here even more compelling to me is that, as you can see, is the clear break of structure at the 578 level, which reconfirms to me this area as a genuine buy rate zone. However, I didn't rush into an entry since I needed to let the price develop more structure here before making an objective decision on whether to take the trade or not. At this point, my thought process was that after this 50-point dip, the price was likely due for a retracement. With that in mind, I placed my short entry, as you can see, just below this bearish order block at the 570 level. My reasoning was that if a minor upward retracement occurred, it would be a healthy move, signaling a natural adjustment within the context of a larger downtrend. Clearly, the analysis paid off as the setup proved its viability. That said, my entry could have certainly been cleaner given the drawdown I experienced. Looking back here, I should have obviously placed my short closer to the base of the order block. Still, no complaints. This trade worked out well in the end. Now, let me emphasize something important here. This trade didn't succeed because of luck or some supposed genius in reading order flow, price action, or anything like that. No, it worked because I only entered the trade when the setup clearly revealed itself to me. In other words, A, B, C, and D aligned perfectly and fit my playbook, confirming this way my bias. Now, when a clear bias aligns with the setup and price action, that's where the green is made. That's how I was able to close this trade in the money. By the way, if you find these price action setups insightful and are interested in exploring more trade opportunities, don't forget to watch the upcoming video for an in-depth analysis of similar strategies. Alright guys, thanks for watching, and as always, hope to catch you all in the next one.